We told you a little earlier in the program that foreclosures continue to drop, and with housing prices recovering and confidence returning, the thought was that more renters would become buyers. But mortgage rates closing in on 5% may be turning that theory on its head. Diana Olick has more.
In cities across America, apartment buildings are going up. Rental demand took off after the housing crash. Some called it Renter Nation, as home ownership fell from a high of over 69% in 2004 to just 65% at the beginning of this year. The reasons were simple: financing and fear.
I'm a renter because I can't afford to buy a house right now.
I am scared, in part due to the fact that my father and mother had a lot of problems with the mortgage.
Just as housing was starting to recover and more renters were considering buying, mortgage rates jumped over a full percentage point in just the past 2 months. That has some potential buyers even more nervous than they already were.
We're actively looking for a place to buy, and right now it seems that from what we understand, the mortgage market was topsy-turvy.
While rising rates are throwing a wrench in the housing recovery, they are breathing new life into the apartment sector.
Mortgage rates going up by 50 to 100 basis points takes out a lot of the ability for people to afford to buy a home.
They're also benefiting the REITs that develop new apartments, names like Essex, Avalon Bay, and Camden Property Trust.
With rates going up, it curtails development because it makes it more expensive for developers. That bodes well for the REITs because they're the ones with the capital.
Apartment rents rose in the second quarter of this year, up over 2% from a year ago, according to a new report. Rent growth has been slowing, but largely due to weak income growth. And these latest numbers were from before the mortgage rate jump. Rising mortgage rates have already cut the average buyer's purchasing power by over 10%. While rates are still historically low, credit is still tight, and getting that low rate can be tough. Not to mention that consumers' memories are short. And after years of record low rates, the thought of getting a mortgage at around 5% could be a deal breaker. For Nightly Business Report, I'm Diana Olick in Washington.